Good morning, everybody. I've been awake for a little bit. Nevertheless, it's 8:44, and you know what day it is today? NFP. NFP day. This is where we make generational wealth. This is that day. 1:30 p.m. is going to be more crucial than it is London session. But I just want to have a quick glance to see if there's any opportunities. Now, with that being said, we are prioritizing the New York session, but I am open to lower risks trades that may appear this morning. Okay, so starting off with DXY. What do we see? We're gonna start with a daily time frame or weekly time frame, and then we're gonna go down from there. So this is the last trading day of the day. A weekly time frame. We have been well. When you look at the grand scheme of DXY, we're actually moving quite slowly. And obviously, I was gonna move this quick, but you can see here we had huge bullish displacement, bullish displacement, bullish displacement, big bearishness, and then a lot of kind of up and downs. But it'll be a series of bullish runs and the bearish runs. Here is short and snappy. So you've had to been recent times, at least since April, you would have had to been more. What's the word when you are adjusting in real time? You have to be flexible, but there's another word I'm looking for. Reactive, in a way that you would price will change direction like this. Like yesterday, we were bearish from the get-go. We lost money, and then we waited for a better bearish opportunity. We made our money back. So we had a break. We actually made profit technically by like a small amount. I think by like a couple of quid, which is interesting because it's basically break even, right? But my goal is to have every single trade day to be profitable, not blindly. For example, here we deposited 25 last week, so 7 days ago. And in fact, let me get the exact date. On the 29th of May, we deposited £25 and we made £124. What was that? What's the date even today? It's the 5th, right? So it's the 5th. There's been 1, 2. Yeah, it's been exactly 7 days. And we've made £125 from £25 account. Which means we 5x'd our income. Pretty good. Anyway, or rev, not income, our account. So in theory, next week we should be reaching a couple like £600, and then from there 3k, and then from there 15k, and then from there 125 or 75, and then there and then forth. So we'll see how that goes. Now, with that being said, the weekly on this occasion we've been moving up and down. We're still kind of moving down. We moved up recently. I think this is going to go down. Why? Because if you see from here to here, we pull back into this area of displacement. You can see there's also an area up here. I believe price will want to react, go down, take out this equal lows, and obviously this bullish fair value gap, which will be a lot clearer on the daily time frame. So we've taken out structure here. We've filled the kind of bearish imbalance. There is one more to still be filled, so there is some room for price to go higher. But the general idea, at least, is that we've taken out these swing lows, 1, 2, taken out those 2 swing lows. We created equal lows here, which is liquidity and support, and then we are selling, or at least my idea is that we're selling towards the area. We're in a premium. We just touched this fair value gap, which is the remainder upper half of this that hasn't been filled yet, and I expect price to drop, taking out this low, filling the rest of this bullish fair value gap. There's also another bullish fair value gap here, and then obviously the equal low. So I think there's a lot of liquidity down. So I'm actually bearish on the dollar now, which is interesting. Is that I'm bullish on the information. I think price is going to be bullish for the dollar, at least news related. So there's reason for it to go up. So with that being said, we have to be flexible. We have to be reactive to price because, like I've said, excuse me, is that on the weekly time frame, we haven't really. It's been changing directions very quickly. So we got to be adaptive. And with that being said, it means that we need to. Yes, we have a conflicting idea of price action showing us that's bearish, news forecast bullish. I'm obviously more inclined to price action, but I cannot ignore news because it's a foretell. Now, obviously, we don't know what news is going to be, whether it is bullish or not. We have to wait till 1:30. So we might even take the posture of we're going to enter trades based on price action and secure some profits slash leave some running for news, and then really get into our trades after news at 1:30 after manipulation has happened. Right, so that's kind of our posture. We're gonna look for trades now based on price action. We're not gonna account for news when we don't know what it is, and also when at the end of the day, price action rules for me because news will give you price action. The news is translated to price action on the market because price action will always exist because price and time is the two axes on the market. Y axis we have price, X axis we have time. So anything that is being communicated to the market, whether it be manipulation, whether it be wins, losses, news, microeconomical news, like economic news, it doesn't matter, right? It will be translated to price and time. Price will move over the course of time. That's what will always happen. So that's what I rule in price action. And sometimes I don't even acknowledge some news days because, or news releases because of the fact that price action will tell me what news is anyway. Because it will basically translate. Cool. So I'm going to go over the trades that we have of some interest in slash we're in. So starting off with DXY, like I said, we're bearish on price action. We're bullish on these types of pairs. But one thing to note is that I like to look for price showing the pairs instrument itself to have its own bias as well. So with EU, same old, same old. This created a lower high. So there's a lower high here. This like low got taken out with this displacement here. We had a retracement back into this fair value gap, tagged it here. We are moving downwards again. Now we haven't taken out these lows right here. 1, 2. Those are two lows where there's gonna be sell side liquidity, and it lines up with this bullish fair value gap. Although we have tagged into it once, which kind of pushed up back into this bearish one. So we kind of have consolidated between here and here. So we almost have a range. In this range, if we go to the 1 hour, let's go to like the 2 hour. Within this range right here, we are in a premium. Okay. We also yesterday had a touch of this 2 hour order block. So we go to 2 hour time frame, we'll be able to see it. It's 2 hour order block because there's a displacement here, right, which traded below this body, and also these swing lows, some swing lows and short term lows here. So from this order block here, price came all the way back up to it. So we entered the sell around about here, thinking price would get to here. It didn't, it went up. This to our order block, we saw reaction, rejection, saw on the small time frame, the displacement, and then bam, price displaced downwards. We didn't sell to the bottom, maybe about halfway. We made our money back from the loss we took from selling down here. Price tag that came out down, we have come back up, into this area. So if we draw a fib from the range, from the posture of a sell, we are, let's scroll down in time. Get some blue ones in. So this fair value gap here is in the 62705 zone. If I would have entered, my stop loss would have been above the first candlestick contributing, so it would have been above here, so around about here. Now the only way I would enter this is, number one, let's mark midnight open. This orange line here. Get rid of this vertical now. Excuse me. So from midnight open, traded down a bit, came back up, took out, well, created a low, took out buy side, came down, swept below these equal lows, and then rallied up higher. So use that liquidity to rally up. And so far it came up to this area here, which is a 1 hour fair value gap. And we filled it. We are yet to kind of see it. What you could do, what I like to do, right, is when you have a 1 hour occurrence. So when price gets this 1 hour fair value gap, I like to zoom in and then see a valid reaction, or basically see the model again, where I want to see the lows get taken out with displacement on the 1 minute and then the retracement from there. So it's kind of like a scaling of the same strategy, but the strategy is the entry strategy is the same, where we see it happen on 2 time frames after an event horizon or an event happening on a certain time frame. We treat each time frame as its own purpose, but it's all linked together. So the 1 hour here, we've had price pull back into it, but you also note that price dropped and we're having a retracement, so it created this leg here. Now I'm kind of isolating this leg in truth, but I'll get to how it's linked later. Excuse me. So this hourly fair value gap right here, price has swept it because there's some highs above it. So there's some buy side we've swept, come up to a key area. We now need a reaction instantly to come back in the range. Now I don't like this because we filled the fair value gap and we almost disrespected it. So not that it's not valid, because it could retrace straight down, but I don't like trading off of these. And let's get a clearer idea. So although we are bearish, price can go up. We have to be accepting that. There's a low here and there's a low here. Like the lows, it depends what time frame you look at it on. Like we have failed to create a lower low down here. But starting from this swing high where we created a bearish kind of idea, what happened? We've been creating these lower lows, lower highs consistently. This is the only time we haven't gone down. We've come back up. So there's still potential, as long as it doesn't close above, for this to go down. But at the end of the day, we have failed to create a low low from that moment of it making that leg. Okay. So with something like this, I just don't trade it. Wait for something cleaner to happen. But EU is on high. I'm on high alert. It's a low interest trade, but the pair itself, I'm going to put on medium to meet halfway because it's high interest USD today. GBP AUD. Another thing that's bearish, we could also note that within its bearishness, it hasn't been moving. It's been moving quite lethargically, moving quite slowly. Even on the daily, we're not really seeing much expansion, but it is quite a dense pair. So we don't always need those strong movements to really get involved. That being said, though, we need a clear idea. So on a daily time frame, we've been bearish for quite some time. We did tag into this bullish fair value gap, which is pushing us up to this bearish fair value gap. But to draw from the extremes, you can see that we're in a discount or below that equilibrium here. Probably should do it the other way around, actually, since it will be kind of like a buy bias almost. So yeah, this value gap was in the 7-9 level, tagged in, bam, could have got in there, but obviously not trading like that. Right, what else? So yeah, we tagged into this bullish fair value gap, coming up to this bearish one. We didn't fill it properly over here, so it's plausible we come up to it. But what I would say is I'm not interested in this right now. Put this on very low interest here. The ones I haven't seen. Yeah. Right, let's have a look at USD CAD. USD CAD is also going to be on high alert because both USD news, when there's NFP, there is also CAD news. So on the weekly, we've swept these lows multiple times. There was low here, got swept here. We didn't sweep it this time around. We did close just above this swing high here, but it could be a sweep, push down, come back up to this area. So let's see what these green lines are indicating. I think it's just equal highs, equal highs. So I think we wanted to see a sweep of maybe the top one. We are yet to see that, but if you look at the hourly time frame, it looks like we are almost bearish, but we are kind of moving off of nothing. So it's going to be another medium interest for me. GU, let's have a look. Don't like the weekly time frame at all, so I'm going to go straight to the daily. Similar to EU, had this 2-hour order block pushed down. Now the thing about this is that at that point where we created the lower highs over here on EU, we had a divergence with GU because GU created high highs, although it also did follow suit in taking out the swing low with the displacement. So it's the same thing. So this pair is a bit stronger than EU, but it had the same idea. So if you missed the EU trade, you could have got the GU trade. Now with this 2-hour order block right here, well, you just go to 2 hours and show you. And I might sneeze. Okay, bless me. Right, so we have the 2-hour order block. You can see here price displaced. and it's creating kind of low since. It did come back up to it once and traded below this low here, consolidated a little bit up around this order block, and it went down. It isn't the strongest order block because we're not seeing the strong reactions from it. We've also come up to it multiple times, which weakens it over time. So I'm not the fondest of selling from it, but it's kind of in the middle of nowhere again. I mean, on the daily time frame, we are bearish overall, but we did feel this fair value gap, closed a little bit above it, and there is some idea for bullishness, I won't lie. So I can sense kind of bullishness creeping in, which does line up with the forecast of DXY being bearish on price action, but to the point of DXY being bullish from news and manipulation, it does warrant selling opportunities. And I'm generally speaking bullish on the dollar, especially around this time of season. GBP NZD. So I'm gonna leave GU as low interest. I don't like it, even though it's the USD involved. GBP has been quite bullish recently, and USD is a bit conflicted in where it wants to go. If it happens that USD is bearish, then I am very much happy to put this in high interest because GBP has been quite bullish. Sorry. Anyway, moving on to GBP NZD. Daily time frame, we're obviously bearish. This is what the type of moves I like, where it's just strong, strong moves. And you can see here, we create these clean lower lows right here. From this area, or this extreme to this extreme, we're obviously in a premium. And let's see on the smaller time frames what kind of areas we have. So remember drawing multiple 1 hour fair value gaps to see which one price would react from. And I kind of settled on, I think I took out most of them, and I had this one and the one above it remaining. We can get rid of this though. And in that, I was expecting price, right, to tag this, and then we could have a kind of a strong sell-off, to mean that well, it would have to be based on hourly time frame if that's the case. But it would be like a very, very, very strong move. Now, this move from the high to the low took 3 days. I'm not trying to hold over the weekend, personally. So I won't be entering this type of trade with such wide kind of stop loss and TP. So I'll be looking for smaller reactions, smaller moves. And with that being said, it would mean that price needs to come up a bit more into it. And I know we have it yet to take out. I really think price wants to take out these equal lows, right? There's the buy side over here. There's going to be buyers over here. So I do think price is going to go down eventually. I wanted to though tag into this fair value gap a bit, and then we can go from there. We currently are in this order block of daily time frame, but you can see it's very large. I mean, midway point is about that 7-9 level. You see here, this is the 0.5, which is nearly at that 7-9 level, which is that fair value gap here. So halfway into the order block on the daily time frame is the bottom of this 1 hour fair value gap, which is why I really want this touch to happen at least, and then we can go from there. I mean, it could even go deeper, but I want to see a reaction after price tags into this. Kind of what I'm looking for. And I think that will set up next week too of being sells. So I'm going to put it in medium interest because it could get some of that move today, especially with NZD being in relation to US dollar. Next we have is EuroCAD. I have a interesting like methodology of trading price. Hold on. So this is the methodology I have. It is you wait for the entry to happen. So you scan the markets via the entry model. Once you see the entry model has been achieved, you then zoom out and then see if there is a reason for that entry model. And then you look at the bias afterwards. It helps scan the markets quicker. That's why I do it. Now, in this instance, right, I'll give you an example of GBP NZD. No, it was USD CAD. So you can see on USD CAD, if you were to be trading on hourly, we traded below the swing low here. With a displacement, we came back up to this area. All right, so this is our trading strategy. We can see from here to here, this is satisfied. We're in the premium, in the fair value gap on a large time frame, or lower time frame than hourly. So this is enough to enter, right? But we're not going to enter blindly unless we have a target, a bias, whatever it may be. Now, this got triggered. So when I zoomed out, I was like, okay, why could price be doing this? Did it sweep anything? Did it pull back to a key area? Well, we didn't sweep these equal highs, which is the green line here. There's not really any clean displacement around this area on the hourly time frame. So prices triggered our entry for no reason. So although it's moved and I would have entered it, let me show you. Let's say low hanging fruit, right? I would have entered the bottom of the fair value gap. First candlestick contributing is that blue one. Go to the high, add what pairs of USD CAD. So it might be not the worst spread. So maybe let's say 15 pips. And I'll be targeting at least here. So it's 1 to 1.68. Obviously, this is the minimum. I'll take some out and I'll be maybe targeting a little bit lower swing lows, right? So it works. It would have made profit, but it doesn't matter. It's not my strategy. So I don't trade. I don't care about anything outside my strategy. If I really want to be entering these types of trade, I need to make it my strategy. And the only way I make it my strategy is by studying it, going into study mode. That's where I develop strategy. Reflect mode is when I hone my current strategy. But my point I'm making is this, that I would look for something like this. So when price traded below this low here, from this point, I'm looking already. I've had this for a while, these green lines, because I did this already. I'm looking for, okay, did the price do anything? No. So I can't enter it. So what this helps me do is kind of scroll backwards. And then what I'll do is, okay, an hourly happened. What's the daily kind of mood? Oh, okay, we are bearish because this whole leg is a bearish move. So price coming up here and then going down is plausible. So that's kind of the reasonings as to how I would scan the market for opportunities rather than starting at the daily time frame, creating the bias first. I only do that for pairs I'm familiar with. But if I'm scanning, because I'm trading every pair in theory, though I am prioritizing. If I look at the trades I've taken this week or in the past 7 days, GA, EU, 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 GBP, JPY, Euro GBP, Euro USD, Euro USD, Euro USD, Euro USD, Euro USD, AUD JPY, AUD NZD, AUD NZD, USD CAD, USD CAD, GBP AUD, Euro USD, Euro USD, USD. So you can see Euro USD is my most common pair I trade, and I've also made the most money on it, followed by GB. USD CAD I've made the second most. GBP AUD I think I made the third most. AUD NZD the fourth most. GJ only made a small amount. And then I made a loss on none of them. Oh no, I made a loss on AUD JPY. Small amount. But yeah, every other pair I'm very profitable on. So a strategy works across multiple pairs, or works across multiple different types of pairs or currencies. But you can see I have a favorite in UU. With that being said, I am personally, going to scan the markets with what I just said. So I just gave you kind of what I'm doing before I actually do it. So we're looking for swing lows to be taken out on, it could be the 50-minute or the hourly. I'm going to say hourly just because hourly is better, and then we'll go 50 minutes after. Okay, so this one here, we've traded below this swing low. Let's zoom out a little bit. Okay, so, right, this is interesting. Euro, Swiss franc. Because he's even highlighted on the watch list. So we've tagged into the very deep, I believe this is the daily fair value gap here, right? We've also got some form of a reaction. A lower high, took out this swing low. We didn't exactly, to be fair, we may have. This is an intermediate term high right here, which means price shouldn't come above this. But we can see here we got just about to the equilibrium. Not enough for me. Probably actually is enough because it's the only area of imbalance. And if we enter around here, first candlestick contributing would be here. Add like a couple of pips, 10 pips. We could be in this. We could have been in this. It was about 1-to-1 at the moment. But we had in the fair value, we had the equal lows as equal highs as well as it be in this area. So it's equal highs. We swept those equal highs, and we came into the fair value gap on the daily time frame. Took out this swing low here. You can see from here to here, we took it out. Just been traded below since. So this makes sense for sales. On the daily time frame, you can also see we are bearish. We took out this swing low here, come back up. We draw a fib from here to here. You see we're in a premium from that sweep, and it is a facilitator of sales. The only thing I'm not liking is that this is the only place you could have got in, which is very technical to get into because you have to really understand what you're doing to get in here. Satisfactory. Oh no, like a good kind of basis, right? But it would have been difficult to enter this confidently. So yeah, and right now we're just kind of moving a bit scanty, which is the word I use for when price is choppy. But yeah, we had that clean move here. Now, if I was to potentially re-enter, there's no entries on this time frame. I'll need another touch. There's this opportunity here, which is a 50-minute, 5 minutes, sorry, which hasn't been tagged at all. So price could come up here. We also have the 50-minute, which goes a bit deeper here, but it's already been tagged. So I'd rather aim for this, right? This could actually go up to high interest, which is interesting. And we'll be looking at shorts from here. The stop loss will be above here, 675, and then triple two. And then we'll be targeting equal lows as well as potentially leaving some to run further on. So you see how we started with looking for the entry model, and then we worked backwards to see if there was anything. And I showed you an example of it working, of us finding a valid potential trade versus us using, what was it again, USD CAD or GBP NZ? Yeah, USD CAD, where we saw the move, but we didn't see the context. And because there's no context, we can't enter. This one we can potentially enter, right? So I'm showing you how I'm scanning the markets. Now that we've done that, let's scan through even further. And let's see if there's anything else. So there's another example on GBP Swiss franc. It seems to be a common theme with Swiss franc. It just seems like a continuation. Then you have a look, potentially have a look at that. Don't like that. This could be a sweep of highs, maybe. Maybe have a look at this. Rid of those. I'm a fan. Really below here, you can have a look at this as well. That's that irks me, those types of things. Okay, I'm going to focus on these Swiss franc pairs right now. So on the daily time frame here, so I just start with the weekly. So bearish on the weekly time frame, and on that, I had to kind of guess what the next candlestick would be. I would say black for sure. Build this imbalance already. Liquidity down here, these swing lows. We've been breaking, creating these new lower lows every time. I'm bearish on this for sure. The daily time frame, we've actually gone the opposite way. I mean, technically, you can see this as a sweep or pullback. Get a little bit of a cleaner look. Go to 2 hour. We swept a lot of places. I mean, this would be probably the most prominent. This is kind of the most clear for equal highs being swept. And it makes sense because from the area, we've traded below this swing low right here. Excuse me. And you can see we've displaced in doing so. But we just haven't had, it's basically the same thing as Euro Swiss franc. We haven't had that pullback. It's moving the exact same. So, I mean, if we were to draw from this extreme to this extreme, we have an order block over here on the 15-minute time frame. So we could potentially even enter something like this, but this does have deeper zones. For example, there is a value gap here. There's that's the only one actually. Actually, there's some up here as well. But it's just littered ones across. So when there's that, I either account for it by putting my stop loss above the most highest zone, which will be up here, and my stop loss will be up here, which is quite fast. So I'll then look for a smaller time frame displacement, and basically the same thing happening on a small time frame from that area. Yeah, I mean, it's pretty much the same thing. I'm assuming it'll be the same thing for this. This one might be good because USD is the kind of subject of the matter today. And we have both bearish and bullish ideas. Bearish in the fact that DXY price action is bearish. Bullish in the fact that news could also bring price up. But this also is agreeing with the bearishness price action of DXY because we have the daily time frame. We've swept these highs up here, right? Similar to GBP Swiss franc. These highs, both all of these have been swept. What's interesting, we've swept both, but we've also come back down into the range of both. So we set both, and we haven't just, you know, displaced. We've displaced below both of those sweeping. So both got a lot of liquidity on our side for sales. We've traded below this. We can then draw this kind of fib from that extreme to this extreme. Realign this. And you can see here that we have some interesting areas. So we have this nice clean fair value gap on the hourly time frame. We just would like a cleaner touch, and then we could enter the sales towards. This could be a very, very strong swing. So I'm very, very bullish on Swiss franc, and if I'm bearish on the US dollar, that sell off could be generational. So what I like to do in NFP times is to look for opportunities where I'm expecting the strongest expansion. So if I believe DXY to be very bearish, and there's other indices you can look at too, right? I forgot the what's it called? The symbol for a lot of the indexes. But for example, you can use the yen basket. There's also a thingy for a yen index. Yen has just been bearish for a very long time. So these kind of places that will potentially look for sales. I'm better at selling. Like if I look at all my, literally every single one of my trades, apart from a couple, I've entered 1, 2, 3, 4, 5. Well, since the 25, 1, 2, 3, 4, 5, 6, 7. I think I've entered about 20 trades. Only 2 of them are buys, and it's just partials. 2 buys over 1 trade. So out of my 19 trades, 2 were bullish, which are buys. So I'm a seller by nature. So generally speaking, I do try to look at it like this, but it does look weird though. I don't know how to describe it. It doesn't look right. Oh, it's because the candlestick colors are opposite. Okay. But yeah, I am not seeing hold up. No, let's leave this alone. This again would be more liking it. All right, leave that alone. But my point is this: that what's the Swiss franc index called? Is it? Oh, clean. Short term bullish, long term bearish. Took out the swing low. Could be part of the retracement. Not much data though. We tagged this in, so it actually could be bearish, but then we react into this as well. If I had to guess though, from here, I would be bearish. I'm not gonna lie. It's just Frank actually bearish in that front. But I don't know if this is the proper index. This is more like it, except it looks disgusting. But this is bullish. I mean, I was here, I would say bullish. I'm not gonna lie, because we didn't trade below here. Just created equal lows, and we've been over time quite bullish. I would expect this to be bullish. though it looks bearish, but that looks disgusting. Get me out of here. I don't know, but I'm gonna just have to use the price action of the bias from the actual pair itself. But we are bearish, bullish. Sorry, with Swiss franc, and this is my most the one I'm most keen on is USD Swiss franc. Yeah, this is the trade we looked at, didn't want to enter because this leg failed to create a low. But most importantly, we didn't really respect this 1 hour fair value gap enough to warrant an entry. We didn't get a nice clean area. Like, I don't trade off the 1 minute blindly. Even if you did, right? Okay, this swing low, we broke it, but we didn't displace, and this is the 1 minute time frame. There's no displacement even on the 1 minute time frame. You cannot enter, even if you're aggressive. That wasn't an entry model, right? So we're trading up, but what this could mean is that this could be a part of the idea of bullishness for USD, where it sweeps all of this to then do this. But we'll see. Like, that's why I said I need to be careful. So I don't think I'm actually going to enter anything right now. I have a couple things I have an eye on, like the Swiss franc pairs. These are more short-term entries, but all of them are far from entry. And then I think we're just going to come back again on during the New York Open. So yeah, we've analyzed the markets. I don't see any opportunities. I'm not mad at it. I like trading and I like not trading. You need to get used to that, because not trading means you cannot lose your money. Every time you enter the markets, the potential for the markets to take your money away from you. So you got to look at trading from every perspective possible and choose the one that fits the success of your account, and the one where the perspective that fits what you have to do. For example, if there's no trading setups, you don't want to force trading setups. So what you do when there's no trading setups, you convince yourself that it's a blessing to not trade, because you don't know what's going to happen. When it comes time to see multiple opportunities and you feel, oh my gosh, there's so many, how do I know which one's going to work? You give yourself confidence. You see, well, all of them are going to work because my strategy says all of them are going to work. I'm going to trust my strategy. And then in the reflective mode, you can then determine if that's a positive outlook. But yeah, it's not a delusion where I'm convincing myself to do something. Is I have to do something, and then I bring the mindset to accompany that decision. So a lot of times people have it the wrong way around. They have a mindset of what they want to achieve, and then the actions follow it. But the markets are the markets. It doesn't care who you are, right? The markets has been around for longer than all of us. You go to some of these pairs, like for example, Euro USD, go to the weekly time frame. I was born in 2002. To be fair, okay, it's a little bit older than me. I was born on 28th of May. So funny enough, this began, at least on the visual markets, on the 2nd of May. Let me see if there's another pair that's older than me. US Swiss franc, we've been trading on TradingView since 1972. I'm not sure if it's TradingView or if it's just available. I don't know what the dates are based off of, but 1972, that's older than me. So some of the markets has more experience than us as people. So why should what's the good when it sees us, age 24? This has been around since 72. What is that? 28 plus 26. That's 54 years. It's 54 years old, this pair. Why is my mindset going to be what it obeys? No, I need to understand the market itself. It's older than me. I need to respect it in that regard. Respect doesn't mean I fear it. Doesn't mean that I can't make money from it. Doesn't mean that I obey it. It just means that I need to have an understanding that it's been around longer than me. It's going to know things I don't know. It's going to do things that I don't expect it to do because it's got age on me. So why do I say all of that? I say all of that to say this, that a lot of people that have the mindset that the market's listening to me or the market's is beneath me, that's okay, but don't let it be pride because it's older than you. There's a scripture in the Bible, Psalm 24, where it says, lift up your heads, you age-abiding doors, that the King of glory shall come in. What's interesting about the scripture is that it references age. Some versions say age abiding, some say everlasting doors. So these doors have been around for some time. And you'll notice that the person had to repeat themselves twice, despite who they were talking about. Every door should open to the King of Glory. But you still had to follow a system for the door to be open. It's like a door, right? Yes, you can kick down the door, but the general, more, what's the word, cordial way to open the door, or the societal kind of expected, what's the word I'm looking for? The word I'm looking for is a word that describes a person that has a dignified way of doing things. So the dignified way to open the door, let's just say that, is to get the key put it inside the lock, turn it the correct way, and apply the handle downwards, and open the door. Right, you unlock the door with the key, and you open the door afterward with the handle. But this door, the system was you had to be worthy to enter. Who are you? We lift up your age abiding doors. That means the doors abide to age. So the person had to come and describe the age of the person that was coming to the door. So there's gonna be some doors that respect age. Now, when this thing of the market is 52 years old, 54 years old, we just calculated. It's older than me. I'm 23. I have to come with a model that has. I'm not coming with my own strength because what am I going to do? It's older than me. But I'm coming with a model that works, a model that has been back tested by thousands of people, by over 30 years of experience. Sure, the door may not open all the way because it's older than me, but 30 years against 54, a 30-year-old can give 54-year-old advice. It's less likely a 20-year-old is going to give a 54-year-old advice. But if you add my age, 20, to the age of the model, 30 years, it's 23 plus 50, 30, sorry. So my training experience is actually 10 years. Hold on, 11 years now. 11 years plus 30 years, 41 years. We're close in age. What's my point? I'm making a point of, and I think I'm getting a bit too deep here, but let me just break it down, my original point. People make up their mind and then the actions follow. Rather, I say make the action and then bring the mentality that accompanies the decision you have to make. How do you know you have to make the decision? Well, it's a fact. You have to be honest, transparent. You have to be good with psychology. Psychology and mentality are not exactly the same thing, though they take place in the same place. Psychology and mentality are different. Mentality is that I win all the time. I win always. Psychology is my control of my emotions in this instance. So controlling my emotions means that I'm not greedy, I am not fearful. I have control of those things. Not that I don't feel those things. Not that when my money is going down, I don't feel a sense of, oh man, I'm losing money, it sucks. Of course. But I have control over it, where that feeling of me losing money doesn't then take manifestation in me taking out my trade early, or basically manifesting itself to make a decision. That's what it looks like when you have a mentality and the actions for the suit. You feel fearful, then you make a fearful decision. My thing is, I make a decision whether I feel anything or not. My feelings are out of it. I then bring the mentality to secure the action. So the action I have, or the action I have to make, is I can't trade because I don't see any valid setups. Because I don't see any valid setups, I am bringing the mentality that I am happy that I am not trading, because it means that there's no place for the market to take my money, because I do not believe there is an opportunity. I may not be right, but my actions is a fact. I cannot change that. But I'm not allowing my emotions or my wanting to. I have a target of every week of making a certain amount every week. I haven't met that target yet. It's very possible I make it today, but I haven't hit it yet. And it's very easy for that feeling of not hitting my target to manifest itself in the action of overtrading. But I cannot overtrade because that would be me following my emotions. So if I make the decision first and my mentality follows suits, it's securing the good decision. Now, like I said, I may not be right, but it's based on facts. So even though it's not right, it may be a mistake I made, whatever, that can be solved in another time, which is, remember, there's 3 modes: study mode, market mode, and reflect mode. The times where I correct the mistakes is in reflect mode. I don't have the time to correct my mistakes live. I can only trust my decision making. That's why I am trusting my decision making and then following suit with my mentality. Mentality, you have to be careful, because if you can make yourself do anything, believe anything. So if I believe I can make money every time I enter the market, it's possible I can do that. But the problem is, if I lose control of that mentality, I would just be entering every trade. If I think about it, if I win every trade, why would I not want to enter every trade? But that's putting the cart before the horse. Because I win every trade or the reason why I win every trade is because I follow my strategy. You see, when you take out the strategy and you just keep the mentality of I win every trade, you can overtrade, enter bad trades, lose money. But if you have the mentality, I win every trade because I follow my trading plan. My trading plan is this, it's backed up by that. I have the system first. I have the system in place. So my mentality is not based off of nothingness. It's based on the system. And then that system I trust. So if I step away from that system and then lose mentality, my mentality is worth nothing. It's like someone trying to tell me they're stronger than me, but they've never traded a day in their life. it doesn't make sense. If you're a boxer, every boxer goes into a fight thinking they will win, but there can only be one winner. To be fair, there could be draws, but for the most time, there can only be one winner. But both boxers believe they're going to win. So who's going to win the most? Well, a boxer A versus boxer B. Boxer A may believe they're going to win because they believe that the other person is not serious. But boxer B believes that they're going to win because they believe they train more than the other person. They believe they train the hardest. They believe they left nothing on the table. They believe they put everything and effort in towards the training camp. So in their mind, their mentality is based on the fact that they believe them the strongest. Another person may have let's include boxer C now. They may have the mentality they're going to win every fight because they've won every fight. Now, who's going to win? I'll probably put the money on the person that trained the hardest. Obviously, I don't know. That's the only information we have on the people, right? You can also put money on the person that's won every fight, but they may have won every fight because they've only fought weak people. The person that may think the other person on serious is because they have a person that is leaking information to them, but the person is lying. The person that's trained on their system, they may have a flawed system. So you can make a point for everything, but I would probably put my money on the person that's trained the hardest because it's a fact. I've established it as a fact. It's also a fact the other person is undefeated. It's also a fact the other person believes that the other person is serious. So they all have their own reasons, but I don't like betting on other people. I bet on myself because I know what I put in the work. So I live have shown you guys me studying the system of the model, and I've shown you results of the model working. I believe in the model. I see the model. I understand the model, which is why I believe in the model. I see a lot of the reports of a lot of people who have used his model and seen success. His model has created many millionaires, and I'm going to be one of the next few. And my point is this: that let me recalibrate my point. 1 second. That my personal mentality is based off of the things I've seen work. Kind of like a relationship with God in a way, because God is nobody until you meet him. Because there's people that live their whole lives without the belief that God exists. So to them, God doesn't exist. They don't believe in him existing. But once you meet someone, it's like there's people in this world, let's even start there. People in this world I have never met in my life. I will probably never meet. So to me, they don't exist. Right? But here's the funny and interesting part. When I meet them, that's when they begin to exist. Cool. Anyway, back to the market. We've been talking for a little bit. Let's see if there's any movements. No. Okay, so we're gonna sign off. Come back for New York session. I'll just keep an eye on the markets. I don't expect anything to happen right now. The markets are just preparing for NFP, but that's fine. I am CJIC, and I'll see you guys later today, most likely. Peace. Let's go NFP.